Hello and welcome. You're watching News9. I'm Shweta Kothari. We are bringing you stories from the world of business, policy and economy in the light of a showdown, a war-like situation, or rather a full-fledged war that is currently panning out in West of Asia. Suyash Maheshwari joining us to discuss impacts perhaps on the global markets and also on Indian equities. Indian equities, very surprisingly, closing at 1% higher.
Yes, Shweta. So we have also seen a rebound across the globe. Now, this, currently the prices in the global markets, let's talk about them first. The Stocks 600 index, which tracks European stocks, was trading about 1.5% higher at around 4 p.m. this afternoon. Riyadh's TASI index was also trading with gains of about 0.63%. Israel's TA35 index was trading about 0.5% higher. The index was about 1% higher this morning, so some bit of profit booking there. Egypt's EGX30 is currently trading at about 1.4% higher, and also the Indian markets have also posted strong gains, as we were talking about, gains of over 1%, and it's largely trading better than the Asian peers.
All right, let's go back to the Indian markets there. Let's also quickly run our viewers through how Indian markets have done.
Yes, so Shweta, after yesterday's fall, Indian markets have erased all of Monday's losses, and in fact Nifty also managed to breach past the 19,700 levels in the intraday trade. However, it could not sustain above those levels, and we saw some bit of a profit taking play out in the last half an hour or so. Now the index, the Nifty 50, gained about 177 points to close just about 11 points shy of the 19,700 mark, whereas BSE Sensex has gained about 566 points, and it closed above the 66,000 mark and closed at about 66,000 points at 66,079 levels. Broader market, Shweta, after a week of underperformance, have started their uptrend, and they have in fact outperformed the headliners. Both small cap and mid cap indices were up about 1.4%. Today also we have seen a decline in volatility. The India VIX fell by about 1.44%, and it is currently hovering around the 11.44 mark.
All right, 11.24 mark there. India VIX, which means volatility is under control. It's just under 12 mark. Let's quickly get in our expert Kranti Bathini of Wealth Mill Securities joining us on the show. Kranti, good to have you back. I want to understand, what are you making of the the markets, the rebound, the green shoots that we're looking at? It appears that the volatility seems to be phasing out, at least from Indian markets, because Indian markets, at least in the last 4 consecutive trading sessions or 2 consecutive trading sessions, have posted gains. Would it be fair to say that the war in West Asia is not impacting India in a way?
Absolutely, Shweta. If we go with the market performance, and especially today's rebound in the market, we can see what's happening in West Asia have nominal impact on the Indian economy. And what we witnessed is last night some kind of softening of oil prices that have a positive impact on Indian markets. So we need to wait and watch how the things are going to progress over a period of time. Is the war kind of situation, how long it's going to last, and what is its impact on crude oil prices? This is going to play a key role in the days to come. But as far the Indian markets are concerned, our domestic macros are quite strong. We can see complete revival in the economy. So the high definition indicators are showing strength, and the monetary policy have given a very good guidance at this point of time. There is a status quo, and RBI targets around 4% with respect to the inflation is concerned. Going ahead, we need to wait and watch how the results are going to be pan out. We are entered into the earnings season, so the results are going to take by and large the markets. At the same point of time, we should not ignore the geopolitical developments that are taking place. We need to keenly watch out how the things are just going to pan out over a period of time. Okay. So at this point of time, we can see the liquidity is quite strong in the Indian market, and every dip in Indian markets, it's a very good opportunity for the investors who are investing with a medium to long-term perspective.
All right. And talking about global markets have also rebounded in the past 24 hours. What does it tell you about investors' confidence in global markets? I mean, European markets is a different story altogether. But if you look at the markets in the Middle East, my colleague pointed at a sharp rebound. Even in Israeli market, the TA35 market has seen 1% rise yesterday, 0.5% rise today. What does it tell you about investor sentiment in the Middle East, in West Asia and emerging economies? It looks like the impact of war that many predicted would be heavily weighing in on markets hasn't really happened.
Yes, Shweta, there will be whenever these kind of geopolitical events that takes place, the reaction will be negative. There will be a knee-jerk reaction. But post that, market understand the reality, how the things are going to pan out. But at this point of time, or if the market witnesses as a sharp cut in the medium to short term, okay, we can see the market to rise again. It's like if you throw a tennis ball from the top, okay, it will rebound. The same way, market also at the same point of time, it will rebound. But here, the important thing one need to identify is the sustainability of this rise. So the events that follows this rise is extremely crucial for the markets at this point of time. So it is completely premature at this point of time. The worst is behind us. Or how the things are going to pan out is extremely important at this point of time. As of now, we need to wait and watch how the things are going to pan out in West Asia. That is extremely crucial for financial markets are concerned at this point of time.
Now, Kranti, you said that the worst seems to be behind us. So, in light of the rebound that we are seeing across global equities, do you think that the, known unknowns like Iran's potential involvement in the war and, the war spreading to other parts of Middle East, have they already been priced in?
If you have to analyze the things at this point of time, Shweta and the team out there, we can't conclude at this point of time the worst is behind us. Okay, we need to see how the things that's going to evaluate over a period of time, because it's a very sensitive issue. It involves a lot of issue with respect to the geographical politics are concerned, global politics are concerned. So these things unfold over a period of time. We need to see. At this point of time, the current crisis, the war between the Palestine and Israel have impact with respect to that particular geography is concerned, because both they may not produce any sort of crude, but these are very important strategic point in the global map, and also very sensitive issues with respect to the global politics are concerned. So at present they have the impact, but how far these events are going to lead over a period of time, we should not conclude at this point of time. We need to wait and watch the developments, how it's going to pan out in the next couple of weeks.
So Kranti, just to clarify for the benefit of the viewers, do you see this market currently being a buy on dip sort of a market, or is it a wait and watch sort of a market?
So yes, if the investors have high risk appetite, definitely for a longer term perspective, Indian markets are warranted to be buy on dips market, definitely. But the sensitive issues, the geopolitical issues can influence the market on a downside.
But Kranti,
at this point of time, what we can say?
Yeah, will it take the focus away from the quarterly earnings season? How big of a factor do you expect the tensions to play out over the next couple of weeks?
Yeah. Suyash, if we have to discuss the numbers, what's happening on the charts, what's happening with respect to Indian market is concerned, market is showing its strength at 19,200. Today, we can see a strong rebound, and again, we are backing towards 19,700 range. Again, we have some kind of resistance zones with respect to the charts are concerned at 19,900 and 800. These are all the resistance zones for the market. So what we can see is if the things that are the news that is coming from Middle East are from the West Asia is getting softening, then we can see the market take into consideration with respect to the Indian corporate results are concerned, and market can climb the wall of worries. But the political things that are playing in West Asia, we need to clearly wait and watch to get a clear conclusion. At this point of time, every dip is warranted to buy, but one should not forget the things, the war times. Also, one need to have a clear view how the things are going to take the grip on the market. We need to wait and watch.
Now, Kranti, in light of the spike in volatility that we are witnessing, and in light of the uncertainties that lie ahead as far as geopolitical macro environment is concerned, would you advise traders and investors to book their profits from the mid cap and the small cap space, especially since we have seen some sort of underperformance in the broader markets compared to headliners in the last 1 week or so?
Suyash, if these are the trading positions and the traders are sitting on good amount of profits, better to take profit from the table and stay with cash, because the geopolitical events can sometimes can go out of the reach also, sometimes, majority of the times. But market have a tendency to discount these geopolitical events. Also we can see. So at this point of time, if the trading positions are there, it's better to book profits. But the long-term investors, definitely they can hold on to their positions. There is no concern with respect to the long-term positions are concerned. Coming to the point, what these geopolitical events create a real impact on Indian markets is especially with respect to the crude oil is concerned. If the crude oil is going to sustain above at an elevated level for a more period of time, definitely it's going to have a long-term impact with respect to Indian economy is concerned, and also the inflation, one of the key factor we need to consider in Indian markets. So the joker in the pack at this point of time, definitely the crude oil, and what we can expect crude oil has been peaked out, okay, but the geopolitical disturbance, geopolitical tensions can create the crude oil to be on a higher side at an elevated level, which can create a negative impact on Indian economy and Indian markets.
Now, Kranti, you expect volatility in crude prices. In regards to that, what would be your advice to investors who are sitting on big profits as far as the upstream companies are concerned? Now, I think Oil India is currently at about an 8-year high. ONGC in the last 1 year or so has delivered 40-45% returns. What would be your advice to investors?
The upstream oil companies are concerned, Suyash. Okay, they're going to take the advantage in increased in the crude prices, and they're going to take the benefit of the elevated crude oil prices are concerned. So, so they can stay on invested for somewhat weeks. Okay, with respect to the upstreams are concerned. But where the pressure will get created with respect to the OMCs are concerned, oil marketing companies are concerned, that's where the investors need to be little bit cautious, because again there will be under recoveries which the oil marketing companies need to absorb, and we are in the almost all 5 state elections. Dates have been declared, so the government may not take any position with respect to the oil prices, crude oil prices, increase in crude oil prices to passing on to the end user. So ultimately the OMCs has to absorb any price rise in the global crude oil prices are concerned.
Okay. All right, Kranti, we continue to track global crude oil prices as well as its impact on India specifically. But let's quickly move on to some of the stocks that we're tracking this afternoon, Suyash.
Yes, Shweta. So first let's look at the gainers today. Now, among the top gainers in the Nifty pack was Coal India. Coal India surged to a multi-year high today and broke past the 300 mark for the first time, I think, since 2019 or so, after Nuvama issued a buy rating for the stock with a target price of about 389 rupees. This implies an upside of about 30% from current levels. Now, Nuvama also expects Coal India to deliver, a dividend of about rupees 30 in this financial year, which will be the highest dividend yield of about 21% for the company. Another stock which recovered, in fact, today was Adani Ports. Adani Ports was up about 3.5%. Now, after the correction that we saw of about 5% yesterday on concerns about the fate of the Haifa port, Adani Ports saw a strong buyback action today, and there was also a buy call from Motilal Oswal, which expects the stock to from current levels to rise about 30%, and it has a target price of about 1010 rupees. Bharti Airtel was another one. The stock surged about 2.5%, and in fact it hit a new 52-week high after the Supreme Court has decided to hear the company in relation to the case regarding the adjusted gross revenue. Among losers, Shweta, the top loser in today's trade was IndusInd Bank. Now, there was no news per se, but the stock has been under pressure in the last 20 days or so after it touched the 52-week high in mid-September or so. Another stock that came under pressure was Cipla. Cipla was down about 0.5%. Now there are reports that the promoters of the company are there is some tensions between them, and there is disagreement as far as the valuation of the company is concerned. So this could impact the potential stake sale of Cipla, and as a result we are seeing some correction over there. Other losers in today's trade were TCS, Dr. Reddy's and Titan, which corrected about 0.5 to 0.24%.
All right, those of course are top gainers and losers, but as we continue to track the impact of an ongoing war in West Asia on Indian stocks, there are stocks that are in focus that are likely to be impacted.
Yes, Shweta. So among the few stocks that we are tracking was, of course, Adani Ports. We saw a good rebound over there. Another one was, Sun Pharmaceutical. Sun Pharmaceutical was down about 2% or so. I think Sun Pharma has a partnership with one of the Israeli companies. The stock was down, and it has been in a correction phase, but it has recovered and it was up about marginally. Other stocks which have business associations in Israel is NDMC, Kalyan Jewelers and Titan. The stocks have seen a good rebound. Titan was under pressure. It ended almost flattish, whereas we see NMDC and Kalyan Jewelers post a 4 to 5.5% sort of gain. So good rebound these stocks are witnessing.
All right. And Kranti, before I let you go, it does appear, and I think something that we've been saying from the start of the bulletin, that there is very little to no impact on Indian equities, global equities, but primarily on stocks that were likely to be impacted have also rebounded this afternoon.
Yeah, absolutely, Shweta. But the business, the trade relation between Israel and West Asia, and especially the region where the tensions are currently getting continued, the business relationship are absolutely very negligible with respect to the size and trade of the market. The trade of the market is concerned. So, except few pockets of stocks where stocks like Adani Ports yesterday, they given a clarification also. The Haifa port revenue is less than 3% of their top line. Those kind of specific pockets have some kind of impact yesterday, and we can see some kind of recovery and rebound at this point of time. With respect to the names what Suyash has mentioned, like Kalyan Jewelries and Titan is concerned, it is a negligible portion of their revenue that's getting impacted. So I don't think so. The markets are the trade relationship between both the countries is at very negligible, but it do have immense market sentiment is concerned. So sometimes in the medium to short term, the sentiment that plays a major important role on the markets. So here the issue here is if these things getting settled down within few days, that's good. But one need to crucially observe the developments in the coming days.
Okay, one has to observe and keep their guards up as far as developments in West Asia is concerned. Kranti, thank you very much for taking time out, sir. Thank you for joining us here on News 9. And keeping up with the Israel-Palestine conflict, the war continues to escalate with over 900 Israelis and 700 Palestinians dead so far and hundreds in hospital. We continue to track the impact of trade and on trade relations between India and Israel. Remember, total India-Israel trade in merchandise and services sector in 22-23, which is financial year 23, was estimated at $12 billion. India's exports and imports from Israel during this time was $8.4 billion and $2.3 billion respectively, leading to a trade surplus of $6.1 billion. Is the trade going to be impacted in any way, and what are the immediate implications for both these countries involved? Let's talk about that. Joining me is Krishna Kumar, my colleague here in the Newsline studio. Also joining us is Bidisha Ganguly, Chief Economist, CII. Bidisha, let me come to you first. Thank you for joining us. Thank you for taking time out. I think the first question that comes on every person's mind who's watching all these developments is what's going to happen what's going to happen as far as trade relationships is concerned? Is there any immediate impact whatsoever? And if yes, in what areas specifically?
Yes, there will be an immediate impact on exports. Certainly with Israel in its current situation, normal economic activity and trade relations will get suspended for some time. But I think the bigger worry for India is on the oil price front, where there has been a slight reaction in the oil market because there is a war price premium that is now being seen, although that is not significant. But we will have to keep a watch on where oil prices move and what are the developments in West Asia.
All right, the one thing that comes to the top of my mind right now is that India's inflation picture is just about cooling off. We're coming off those food inflation highs. We're getting into that range of 4% plus or minus 2%, which is the comfortable range for us. And we were hoping that crude prices will settle on the lower end of things. But it looks like those hopes have been completely blown away by this rise in tensions, this conflict that's raging on in Israel and Palestine. And my point here is that how do we look forward to maintaining our own inflation targets in an environment like this?
That is what I was saying, that this is a major worry, and crude prices were falling because we were concerned about the slowdown in the global economy, China slowdown, etc. That was bringing down crude prices. Although there has been a supply cut by Saudi Arabia and OPEC Plus, that had driven up crude prices earlier, but because of the concern on the demand side, it was coming down. But now this West Asia conflict has driven it up. But I must say that, given that Israel and Palestine are not oil producing states and the war is right now limited to these two areas, so, the kick in oil prices is not that much. If the war spreads to, say, Iran comes in or the Saudi comes in, then that is a cause for concern. As of now, I think it is still, it's only a marginal increase in oil price that we are seeing.
All right, and a marginal increase, but a volatility like no other.
Yeah.
Not seen in the recent past couple of months.
Right.
A $5 increase, a $5 decrease, and again a $5 increase is what we've seen. Now, Bidisha, if Iran is involved, and the possibility of Iran's involvement is now very likely, and it gets into the war actively, not just through Hezbollah, then what sort of impact are we expecting on crude oil production specifically?
So it is not just production. I think Iran is not that important in terms of production, but Iran could take steps like, blocking the Strait of Hormuz, which it had earlier threatened to do, and a lot of oil passes through that region. So transportation is a concern. I think that would be really a worst case scenario, which we are not looking at right now.
Okay. Now, since we're talking about a supply chain disruption, I want to understand what sort of immediate impact are we looking at? The conversations around a IMEEC corridor, an economic corridor, it looks like, that conversation is halted at least temporarily.
And that just began in
G20s,
when on the sidelines of G20, when the IMEEC corridor, and you're talking about India, the Middle East and Europe being connected with one corridor, and Middle East being the central piece of it, and there you go.
I mean, these are long-term visions. So I don't think a stoppage for a period of time will really affect that vision. It will still stay, and it will come back, I think, soon enough. We should not think that the IMEC is now put on hold for a long period of time. I think that will still come back.
Okay, but an I2U2 partnership, Bidisha, the partnership that US was trying to broker, a peace that US was trying to broker between Middle East and Israel, at least that has passed. It will take a very long time to reestablish, an I2U2 sort of partnership where you have a happy and a peaceful Middle East working in coordination with Israel.
Right, absolutely. And in fact, it is being said that Hamas actually created this issue because it was not involved in that peace process. So it is a major issue. The other thing is that Saudi had agreed to reverse its oil production cuts if this peace process went forward. Now it's unlikely to do so, and so this slight increase in oil prices is likely to remain for a while now. We are not going to see that reversal and normalization in oil production that we were expecting, which is why oil prices had also moderated. So that is now not on the card.
All right. Bidisha, let's assume that oil touches $100 a barrel in coming few weeks. What sort of immediate impact are we looking at as far as inflation is concerned in the US and in India?
Well, certainly prices go up. About India, see, US is more self-sufficient actually in oil production. It has its own production facility. They are into fracking, so they have they are able to produce oil, so they can probably kick that up. Whereas in India, it will cause a problem because we are entirely dependent on oil imports. So unless Russia comes to our rescue again by providing low price oil, but I don't think that will happen. So we will see an uptick in inflation.
All right. The question I want to ask is this: whenever war happens, it's the balance of trade in the world that really goes for a toss. In the globalized world that we live in, one corner of the world has a war. There's a global balance that is at a threat over here. Look at what happens when in a volatile situation, war-like situation, people start investing more in safe haven assets like gold. India ideally would like to import less gold to make sure our current account deficit remains in safe territory. Talk to us about that kind of ramifications to the way the balance of economy, balance of Indian economy gets thrown off course because of a war situation.
And just to add to that, India has a trade surplus with Israel to the tune of about $6 billion. What sort of impact will that surplus have on Indian economy if that goes for a toss?
So that too, your surplus with Israel goes down, the oil imports go up, so all of it will lead to a higher deficit. And this typically oil price increase also has an impact on growth. Today we are the fastest growing economy in the world. That may not last. So that 7.8% growth that you saw in the first quarter, it is expected to moderate through the year, but it may moderate much more than expected. That is the fear with a...
All right, just to double check on what you're saying, are you telling us that this could probably have an overall impact on India's own GDP numbers for the current and the upcoming fiscal?
Well, oil price hike is typically has an impact not only on inflation but also on growth. That's a established relation that we have seen over the years.
All right. So a rising import bill is not going to augur very well for India. That is for certain. But, as far as a prolonged inflation is concerned as a result of oil prices, higher for longer, that's the rate cycle we're looking at in the US. What is the probability of that continuing here in India? Given that we are in an election year, elections, in fact, the dates for elections for states have already been declared by Election Commission. With all that election hullabaloo around us, what sort of rate regime are you looking at?
These elections plus war now.
So we had the RBI announcing its monetary policy a few days back. And although they did not increase rates, and that I don't think is warranted given that the inflation trajectory right now is on a downward trend. Food prices have been coming down. Clearly the tone was hawkish, and the governor made it clear that their inflation target is 4%. It's currently still above 6%. So they will not be happy to just to bring it down to 6%, which is the upper limit, but they will want it to go down to the 4% target. So which clearly means that the higher for longer scenario is relevant in India as well.
Okay. And you know, the inflation numbers for the month of September are not out just as yet, but we were discussing just prior to the show, and my colleague Suyash here said that analysts and experts are expecting an inflation to the tune of 5.4%.
Yes.
That is quite within the 4 plus minus 2% range, so comfort zone of RBI. If that happens to be your own estimate as well.
Absolutely. So that's what I was saying, that even though it's on a downward trajectory, it is still above 4%. And so, you know, we do not expect it to come down to 4% right now. That is the objective, to bring it down to 4%. And therefore, although I don't expect a rate hike right now, but it's the higher for longer that is relevant.
All right, so higher for longer, that is the expectation, and inflation there likely to be contained in the next, at least in the last month gone by. But for, you know, overall quarter gone by, what is the estimate that CII and you, Bidisha, are making as far as inflation is concerned? What sort of Q2 expectations of inflation? What is your estimate? And
also projections for the upcoming quarter, considering the situation we find ourselves in at this stage.
So we haven't yet made quarter by quarter estimations, given that the war has broken out and there are a lot of uncertainties around. But for the full year, I think the average is likely to be around 5.4% is what the RBI is saying. I think it could be slightly higher at 5.6 or 5.7%.
Okay, 5.6 and 5.7%, that of course is the estimation. But Bidisha, you know, before I let you go, an important conversation that we had yesterday with jewelers through the day was the impact that the ongoing war is going to have on precious metals, diamonds specifically, because we import, you know, rough diamonds from Israel and give them finished diamonds. That industry is already hurting under, you know, a lot of pressure, low demand, and a very strict high interest rate regime, not much discretionary spending, so not many people buying diamonds per se. But with the ongoing war now and unabated for last 4 days, what sort of impact are you looking at as far as you know, precious metals is concerned?
So precious metals, I mean, there'll be I would expect different impacts. Gold, and from the demand side, you're talking about the impact on the diamond industry. Yeah. So, I mean, and that's not just limited to Israel. We export diamonds to the entire world. There has been demand compression everywhere. So that will be affected, not just due to the war, but mainly due to the rise in interest rates. And gold also, typically gold prices fall when interest rates move up. But however, there is a safety premium which is attached to gold during periods of you know, disruption, war, etc. So I would expect gold to remain at current levels, not a big increase or a decline.
All right, gold likely to remain at current levels, not likely to decline anytime soon. That's the word coming in. We've spoken to 2 experts since morning. So if you're hoping to buy gold, now is the time. Bidisha, thank you very much for taking time out, ma'am. Thank you for speaking to News 9.
Thank you.
The Israel Armed Forces have an Indian connection. In 2015, a team of Israel police travelled to Kerala to inspect an apparel manufacturer in North Kerala. This marked the beginning of a long partnership. sourcing uniforms for Israel police force. Now, the Israeli police therefore dons uniforms provided by a lesser-known company in Kerala called Maryan Apparel. The dressmaker operates from an individual park and an industrial park in Kannur and provides 1 lakh shirts to Israeli police annually. The company has 900 employees. It is preparing to stitch, in fact, uniforms also for Kuwait's National Guard and fire services. The company is responsible for fitting out health service professionals in the UK, Germany, Qatar and Saudi Arabia. Thomas Olickal, who's the director of Maryan Apparel, joining us on the show to talk about the company that is responsible for fitting the Israeli police force that is currently fighting an ongoing battle in West Asia. Thank you very much, Thomas, for taking time out. Quickly tell us, when did the contract come into fruition? How many dresses have you supplied so far? And how proud are you at the moment for being one of a small companies here in north of Kerala, in India, to be in, to have some sort of stake in a war in West Asia?
No, actually, we started our Israeli police uniform making around 7-8 years back. They approached us looking at our. Actually, we are already making a uniform for other countries also, for the Gulf countries like Qatar, Kuwait. Looking at our factory setup and all, they approached us. And I think around 8 years back, 2 top-ranking police officers and the designer and 1 quality controller, they come to our office in factory Kerala. They stayed there for 10 days and they designed everything and they wear it. Then they approved all the measurement, quality, everything. Average around per year, we are supplying around 100,000 pieces.
Okay.
All right. But we understand that so far you've delivered anywhere between 600,000 to 800,000
total around. Total around 700,000 we have already delivered to them.
Okay. Tell us about how this story started, Thomas. I mean, I think for an average Keralite and an Indian watching this bulletin, I want to know, how did a small apparel making company in Kannur come up with such a contract, and not just exercise that contract, won the contract, but also started delivering? Run us through, when did the story begin?
Yeah, this is we started this army uniform making in 2013, and see the main around 1,500 people are working in my factory right now, and all the people are from Kerala, and we trained them professionally to make all the tough type of uniforms. That is our main advantage. In other companies, they are only using this Israel people. So we don't use any Israel people. So our workers know our quality and all. So this Israeli police, they are very, very tough in their quality parameters. Not even a small spot, the garment will get rejected. So we are very much careful to make these uniforms. And the particular people we allotted for the making of the uniforms of the Israeli police.
Right, and now we understand that you're also going to provide uniforms for those who are going to start training for the Israeli police as well. You already, apart from the police force, you also provide uniforms for prison guards as well, from what I understand. And now after prison guards, you are set to give for those who are training as well.
Yeah, this year they started with us for the training for the cargo pant and cargo pant and shirt. That is a very very unique style of uniforms, more stretchable and all. And now the fabric is under making. Yesterday they requested us to prepone that shipment because they are very much need these uniforms very urgently. Okay. And they increase the quantity also.
And the number as well, the quantity as well.
Yes, they increased the quantity. They ordered a double.
Okay. And they want it earlier as well, from what we understand, because the current crisis.
Earlier it was around 22,000 pieces. Now they requested us to make it 50,000.
And they have preponed the deadline for delivery as well, because of the current crisis. They need more uniforms.
Yes. They requested us to prepone.
Okay, Thomas, before we let you go, you mentioned something very interesting. You said Israeli police forces are very, to the point, upbeat, and strict about the quality of their uniform. Do you make the material? Do you source the material from India, or does it come from abroad?
No, some of the material come from abroad, especially their major police force. We are importing the fabric from US. And for the jail and for the training for the fabric, we are making our own fabric.
Okay. From what I understand, Shweta, I want to ask him as well. Sir, it's not just the Israeli police that you make uniforms for. What I understand is that some Qatar, if I'm not mistaken, Philippines, if I'm not mistaken, so many other police officers across the world also wear your uniforms.
Yeah. We are making uniform for we supply to Philippine Army, then Qatar Army, then Kuwait Army, Saudi Army, and almost yeah, we are making so many countries for these police and army uniforms.
All right, that's
and also our major line is this technical fabric, this fire retardant fabric, and that Gulf countries is our major market.
Okay.
Oh, wonderful! What a Make in India story, Shweta.
Absolutely, Thomas. Thank you very much for taking time out. Thank you for joining us here on the show. That's Maryan Apparel there, making uniforms for not just Israel, but also for Kuwait, and uniforms of all sorts for health officials, health workers in the UK, Germany, various countries. A story of Make in India, as you rightly pointed out, Krishna. But before we end this bulletin, the IT results are going to be declared for the second quarter starting 11th, which is tomorrow. Let's quickly take a preview on how results are expected to be. IT sector is under a lot of pressure. Various, commentary that is coming in from IT sector, for IT sector rather, is that the growth is going to be muted. It's going to be a washout year. On the other hand, there are certain agencies that are reporting that IT sector will see some uptick. What is the preview looking like? How is the IT sector likely to perform?
How many red arrows are we looking at?
As you rightly mentioned, Shweta, the IT sector's performance in the run-up to the Q2 results has become quite a bit of a moot point. JP Morgan, as you also pointed out, expects FY24 to be a washout year. Then we have Morgan Stanley on the other hand, who expects some sort of a recovery taking place in the second half of FY24. But as far as Q2 is concerned, there is a consensus that like Q1, Q2 will also be a weak quarter for the IT companies. Now, this will be on the back of uncertainties in global macroeconomic front and sticky inflation, which will dampen the demand for IT services. Now, according to brokerages, there will be a delay in decision making, especially in delay in discretionary spends from these companies, and especially in the smaller projects. So this will be a big overhang for the companies in the Q2 results. That said, it seems that the fact that the stocks have been under pressure for the past however many months, it seems that the weakness that is expected in Q2 numbers has already been priced in. So hence, more than the numbers, the focus this time around will be on management commentary. How much demand is expected to kick off from here. Are there any green shoots of recovery? Also, we'll wait and to hear more on the generative AI front. Then contract signs and deal wins. If you remember, Krishna and Shweta, in the last 2 or 3 months, contrary to the narrative that there is weak demand for IT products, these companies have signed multi-million-dollar, multi-year contracts. For TCS, for example, has signed contracts worth $3.6 billion. Infosys, on the other hand, has signed contracts worth, as you can see on your screen, nearly $5.5 billion worth of contract. HCL Tech has signed contracts worth about $2 billion, and the graphic says it's for this year, but most of these contracts have come in the last 2-3 months. So the focus again will be on what the management commentary is saying, the TCV, the total contract value, the outlook about the demand, and that will be the primary focus. And talking about the performance of the IT pack, in the July to September quarter, Nifty IT has actually outperformed Nifty. Nifty IT has run up about 7.5% and Nifty has run up about 1.6%. So after initial weakness, the IT has emerged as some sort of a contrarian bet in the market, and we are seeing the stocks also, especially the large cap and the mid cap stocks, doing fairly well. TCS, has touched a 52-week high recently. Infosys is about 5% or so below that mark. HCL Tech Mahindra also hovering been near those 52-week level highs. And I mean, you can talk about the rally in mid-cap all day. We have seen tremendous run-up in IT mid-cap stocks lately. So that's pretty much as far as Q2 goes. The numbers will start trickling in from tomorrow.
All right.
First, we'll see TCS, which is tomorrow, and then on October 12th, HCL Tech and Infosys will come out with the results. Next week, we have Wipro, and a lot of mid-cap companies like Coforge and Persistent, Emphasis also coming out. Tech Mahindra will be the last. It will come out the week after the next on 25th October.
All right. So that, of course, is the preview of how IT companies, as and when they come out with their Q2 earnings, but it's going to be a mixed bag is what everybody, I think that is an agreement, a point of agreement that it's going to be a mixed bag for IT sector, for Indian IT sector in the quarter gone by. But shifting focus, and before we end this bulletin, important piece of update coming in there from Reserve Bank of India on 10th of October. It directed state lender Bank of Baroda to stop onboarding new customers through Bob World, the lender's digital banking application. Now, Bank of Baroda is or has been asked to suspend with immediate effect any further onboarding of customers onto the Bob World mobile application. The action is based on certain material supervisory that is concerned and observed in the manner of onboarding of customers onto the mobile banking application. The central bank said in a press release, the press release on your screens at the moment. Remember, there have been news items which talked about how banking officials used unscrupulous measures and mobile numbers that were unrelated to customers in order to onboard more and more people. A report by Al Jazeera that the bank denied categorically, but Reserve Bank of India seemed to have taken action against Bank of Baroda, asked it to stop onboarding any new customer on the Bob World mobile application. And with that, it's a wrap on this bulletin. Thank you for watching.
BrahMos. Stealthy, lethal, precise. It flies at 3 times the speed of sound and cuts through a warship like a hot knife through butter. China's navy has threatened its neighbors, and they are turning to the BrahMos for protection. The Warship Killer. This and more streaming on world's first news OTT, News 9 Plus. Download now.
Three years after the deadly Galwan clashes, India has doubled the pace of infrastructure creation on the border. India's Border Road Organization is accomplishing Mission Impossible, creating infrastructure to secure us from our foes across the Himalayas.
Look at China. They don't have to climb up like us. Once they are on the Tibetan plateau, the construction work, the maintenance work, everything is fairly easy.
On India's 77th Independence Day, an all-women unit of border roads organization led by Colonel Ponung Dobing inaugurated the world's highest motorable road. Ladakh is strategically important for India. It is the only place where the Indian Army faces both its adversaries. Ladakh is a high-altitude desert. Temperatures of -20 to -30 degrees and low oxygen levels here make survival tough. Being stationed in the sensitive eastern Ladakh sector is a tough but prestigious assignment. It is a matter of national pride that infrastructure development along the LAC is being looked after by the daughters of India. In such challenging circumstances, 3 stars twinkle the brightest here. They are the women officers of the highest border roads task force in the world.
All the BRTF, whether it's gentlemen or women, this is the highest BRTF in BR.
We have got the opportunity, and it's the challenges that boosting us up to work in such a place.
उनको भरोसा है कि हम लोग कर लेंगे.
Right now we are sitting at above 15,000 feet above mean sea level. My BRTF is 755 BRTF. My BRTF approximately handling construction of approximately 201 kilometer roads, new roads.